Hi, I'm Keith McCullough, and welcome to our first Investing Summit. This is going to be a good one. We have as good as we can find in terms of people that actually know what they're doing out there. We're going to give them plenty of time to explain what it is that they do, how they do it, what they think. No commercials, obviously, and it'll be back and forth conversation. The idea here is to have peer-to-peer conversation as opposed to having a journalist who's never traded a market in their life obviously try to help you with what to do next. Really interesting setup here as we get into the first session. We started with short selling for a reason. We think it's a great time to be a short seller in America. We think there's plenty of opportunities out there, and we wanted to start with one of the world's best-known short sellers who has not been shy to be a short seller in a raging bull market. And Andrew Left on that front from Citron Research. Many of you know who he is. You can follow them on Twitter. Andrew, thanks for joining, and thanks for being first up to bat here. I appreciate it.
Nice to be here, Keith.
It's a wild kind of a world, to many people, this whole short selling thing. I guess the Elon Musks of the world are now teaching many others who we are, I guess, according to him. But what I really want to get into is how you think about short selling. Just define it in terms of your investment process, your research process, how you look for shorts, et cetera.
It's a very difficult process. Every short has its own life. There's not like one specific theme that you would say that's it. If you were shorting on valuation over the past 6-7 years, you're out of business already. And even though people say you don't short on valuation, I still think that's still an old school thought. Yeah. Of course, what else are you going to short on? The market's making on valuations. I think that was like remember like 20 years ago, people would say, oh, this stock's at 10 times and everyone else is at 7 times. I get that. Then you don't maybe short valuation. But when you have a stock trading, 35 times sales 2022, how do I not short that? Mm-hmm. So yeah, there are numbers, and the reason why there's numbers on the screen is because the numbers go to valuations. And then you simply say, there's frauds, fads, failures, and those are the main 3 sub-themes of shorting.
Yeah, frauds, fads, and failures. I'll go get into that for sure. And I agree with you. Look, at the end of the day, when growth's accelerating, for example, like U.S. growth has for 9 quarters in a row, which is a new U.S. record, of course, people who are shorting on valuation, had some issues associated with that sole factor. A lot of this came into being, with people, pre-having the internet. Like, isn't it a trivial matter just on that point to get it out of the way that something is expensive or cheap? We all know that. What we don't know is what you said. What are the fads? What are the about to be failures? Do you agree with that?
Oh, yeah, most definitely. And also, what could really grow into it? I'll give you an example. The difference between the internet bubble and what we're seeing right now in the cannabis bubble is during the internet bubble, companies were being made that had moats. They had moats, and then once they turned a switch, hopefully had some kind of scalability. I think right now what you're seeing a lot of times in this cannabis bubble is companies that aren't moats and aren't scalable. So the valuation increases aren't justified like the tech increases that we saw for so long.
Mm-hmm. That's a great example. We're going to get into, well, let's just get right into it right now. And we're going to have questions, by the way. If you have questions for Andrew, Darius Dale's in here. He's going to be screening for the good ones. Obviously, we want some good questions for a good short seller. But let's just do pot stocks first. Some of these things have gone parabolic, obviously. You've started to write about it. You started to talk about it more publicly. Yeah, how do you think about it top down first?
How does my language have to be on your show, Keith?
You can say whatever you want.
Some of it is just so fucking stupid, I can't believe it. You take today, you take Cowen, their price to Tilray from 62 to 170. And this is like a month later, right? Now, Cowen, have you completely just taken your credibility and thrown it under a bus and that's it? Just say nothing. Say suspend coverage, anything. It's just so beyond ridiculous. So I think, when people are looking, these are not companies that have like hockey stick type growths that are one day, it's just a different animal. So the cannabis stocks, I understand people's enthusiasm. I understand we're a nation of people who for some reason it's been, marijuana and cannabis has been illegal for all this time. I get it, okay? And I get people are excited. But being excited about something and having that being an investable idea are completely 2 different things.
Mm-hmm. Now, if you look at that, like Tilray and Kronos, I think those are 2 that you don't like. But kind of break it down a little bit. There's 300 stocks. We just, by the way, we're about to launch on cannabis. Our analysts back and forth with me. It's at a bare minimum entertaining, just given the assumptions. But a lot of the assumptions come from this kind of Wally world of TAM or total addressable market. Meanwhile, this is like pot. and you got edibles, and you got this, and you got that. And I'm not a pot guy. Like, I don't smoke pot, I don't eat pot, whatever it is. But at the end of the day, like, is that just it? It's a chart, and people like pot, and people that smoke pot are really interested in that? I'm trying to understand.
That'd be like me saying, I mean, I'm pretty sure the tomato market is bigger than the pot market. Everybody eats tomatoes, whether you have a piece of pizza, whether you have pot. But you go, so we can start like bidding up the price of tomatoes. It's a crop that gets grown and it'll be sold and but most of all, unlike tomatoes, it'll be highly regulated. The profits you can make, how it's distributed, it will be a highly regulated market. But it makes very perfect. But there will be some winners. You know, I put out a tweet on PYX the other day. It's up pretty big. I see now it's like $45. I tweeted about it yesterday. I think it was like $26. Oh my God, it's up a lot. But you know, there's a legitimate company underpinning that. They have a history of agriculture. So if you had to make a bet, how about this? If the whole space is frothy, but you wanted to make a bet on somebody, at least give yourself the best chance on making a bet on someone who could possibly grow into a valuation versus a Kronos, which is like a multi-billion-dollar company that I don't even see I don't even know what their story is right now. They know they can't be Canada addressable for recreational. It's right now just a bunch of announcements they're throwing in with a slick CEO from Wall Street, and let's just get people to buy it. I mean, I'm short a company in Canada called Namaste. I think it's a $700 million market cap. Wow. It's a complete fraud.
700 million is listed in Canada, or is it listed here? I don't even know it.
It's listed in Canada. You can trade it here. NXTTF, I think it is here. Mm-hmm. And I just think, you know, the whole company is just completely fraudulent.
Well, I mean, that's the thing where you get some of these. My analyst just went to like a pot conference, and he's just doing he's doing the rounds, and he's engaging with executives of these companies. By the way, many of them are former construction guys that just had the code right to build the facility. So I found that to kind of be interesting at a bare minimum. These aren't exactly like, you know, executives that are ready to write down the right numbers at the right time. But he's walking around and he's basically like these guys are coming after him because they thought that our guy wanted to write positively on his stocks because they thought he was kind of some investment banking oriented research analyst. But he said his antenna was like, you know, wicked high in terms of these guys being extra promotional and whatnot. Like, who's the most promotional pot stock CEO with market cap right now today?
Well, ironically enough, the most promotional is probably Bruce Linton from Canopy, but he actually turned his promotion into an equity investment from Constellation. So in that case, it worked for him.
It worked,
and he's become, and he's the spokesman for the industry. I'd call him promotional, but I also would say I probably have the most respect for him because he did legitimize the rest of the industry for everybody else. Okay, That being said, I think the CEO of Kronos is completely promotional. I think, as I say, Namaste is not just promotional. I think it's a zero. I think, oh God, I mean, look at Tilray, who just did a convertible debt offering instead of doing a secondary. He's so married to the stock price instead of the underlying business. When you raise money at $17 a share in July, and then your stock gets $150, and you don't raise money again, and instead you do a convertible debt offering, you're pretty much saying you go home at night, and instead of sleeping with your wife, you're sleeping with your quote machine. And that's and it's funny because today when Cowen put that 170 target on it, and I see the stock's down today, it's like the rest of Wall Street. It's like that even made people who like the stock saying, "Oh, come on, man, you can't do that." It's down 9%. It's down 9% on that upgrade.
Yeah, on our morning call that day, I was asking our new cannabis analyst, who incidentally he follows consumer packaged goods. Like, we're trying to, put it within the context of, like you said, it's going to be smoked, it's going to be regulated. You have to analyze it, obviously, but I was asking about the Tilray deal, and I said, well, who banked it? And I think one of the Canadian banks, and was it Cowen that did that deal?
I think Bank of America did it as well.
Okay, I mean, so that's the other thing. Like, how much work have you done on just the inability of these companies to actually get banked?
I mean, they could have got banked. They could have raised money. If they raised money at 17 in July, they could have sold and raised 500, 600 million. But if they sold that, there would be dilution. Mm-hmm. And, these CEOs get married, any CEO, not just marijuana. It's it's funny, part of short selling. It's very difficult to be a CEO. And this goes to Elon Musk. This goes to any CEO who's involved in a company that's being shorted, which is when you go home at night, your kid knows your stock price, Your friends know your stock price. Your neighbor knows your stock price.
That's true.
So imagine having a barometer of your value that changes every day, that everybody knows. When you walk into the restaurant, when everything. And you have to really be able to take the ups and the downs. If not, it'll just destroy your ego and possibly take you to the dark side and do things that you shouldn't, that are not in the best interest of yourself or your shareholders.
Mm-hmm. I mean, and now people are fundamentally aware of that with Elon Musk. I mean, let's just go there. So at the end of the day, this is epic. I mean, we're bearish on this stock, and unlike many, we just started shorting it in the last year, so we did actually wait for it to air itself out. But I mean, I didn't in my wildest dreams expect this guy to do what he just did publicly, and then moreover double and triple down on it. What do you think?
I mean, he's in a class by himself. To be honest, I don't even trade the stock anymore. It's not worth the brain damage.
Right.
There's so much it's just so much that's written on it. Where can I gain an advantage over the next guy? Mm-hmm. And you really can't here. What's crazy is the longs know everything about it. I saw someone make a comment, why would I sell for $420 when I want $1,000 a share? And my first instinct, Keith, was, who's this whack job? And then I saw they own like $500 million worth of stock, which you have to respect. I'm like, oh my God. So I don't know if the shorts are short for the same reason the longs are long. You look at today, this guy, has 9 lives, 10 lives, rumors of his death are greatly exaggerated, a million times over. And it's just not worth, when I say it's not worth the brain damage, maybe, I guess if I was running, a big fund, would it be a small position? Sure, why not? You have to be shorted, right?
Yeah.
Exactly. I'm mere FOMO. If this thing goes to 150 without you and you're a short seller, you want to shoot yourself. But, other than that, Elon Musk is he's a visionary. There's no doubt about it. He definitely ushered in a new age of electric vehicles that everyone's following. No doubt he's a brilliant man, but he probably shouldn't be the CEO of the company.
Mm-hmm. Did you file a lawsuit against Tesla or?
I sued Musk. I was short the 420 day on vacation. I get a quick email from my trade desk saying you're stopped out. I'm like, how did I get stopped out? What happened?
Yeah.
It's going private at 4. I'm like, it's going private at 412. I'm like, what? Yeah. And I said, you know what, let it go. And then 3 days later, everything came out, and I just called my lawyers and said, hey, give me my money back. I mean, it's not against him personally. You lied. Your lie cost me a couple $1 million. I just want my couple $1 million back. That's it. Very simple.
Now, how does that work? I mean, there's another topic of our morning research meeting. I'm like, well, who represents the short seller in that regard? I mean, to your point, if you get stopped out and you lose money, and you're losing money on somebody effectively doing something that's not allowed to be done, is there recourse? I don't even know if there's is there even a precedent for that?
Well, part of the issue I'm dealing with the lawsuit is I would like to be able to bifurcate short sellers who lost money shorting from people who bought the stock based on that, and then the stock went down because there wasn't a deal. But the answer is, I mean, if you have a law firm, it's the United States, and if someone does you wrong and you believe that you can prove your damages, short, long, go ahead and do it. Why not? This is, for me, people say, oh, do you hate Musk? Or I didn't. Last thing I needed was publicity, and I definitely don't hate Musk. I just said, I just want my $2 million back. That's it.
People with him, it's the ideological divide between what everybody thinks or wants to think and who likes who or who doesn't like. You just don't like losing money because somebody played against the rules of the game, which clearly he did.
Listen, I lose money all the time. We were on another side of a trade, and you were right on it. The exact sciences. I lost money. I'm not going to sue them. I lost money. The stock went higher. I covered. Okay, and you move on, right?
Yeah.
That's it. I can't start suing CEOs because I lose money. But if someone lies that I can prove, yeah, why not?
No, exactly. And by the way, on Exact Sciences, we've turned on that one. So I mean, we think that they just did this deal because the growth is indeed going to do what you thought it was going to do, and we've done our research on this. My favorite short ideas, by the way, not to to get into a love fest between the both of us on Exact Sciences and why it's a short. My favorite shorts are the ones that I used to be long. I mean, especially when I figure something out that is going dramatically different than what I would have liked to have seen as a bull. So that's another way to think about, short selling is, what is it that you liked, and is that even changing in rate of change space? Is it changing on the margin? So, Exact Science is a good example of that, but I think a better one maybe that people care about more so, there's more people listening to this that care about, is Twitter. So Twitter, we went from bullish to bearish, and you're pretty bearish, so I want to kind of get that on the table.
I was bullish. Yeah, I was bullish to bearish to bullish to now. I just don't think you can touch the whole space.
Whole space. You mean social, right?
Social media is like a third rail of investing right now. It just, if anything, you almost have to say, God, for just on the numbers basis, you got to own Facebook. If gun to head, you had to own one of them. But, it just seems to be, it's this, whether it gets regulated, whether advertisers turn against it. I go to Twitter for information, but I also understand the fact that Twitter has become a bathroom wall sometimes. So you have to, my wife actually thinks Twitter's real sometimes, and she'll everyone hates you. I said, because you're reading Twitter. Twitter's not the news. She thinks like Twitter's like Tom Brokaw or something.
Yeah.
It's so stupid. But, it has a purpose. They have to figure out a business behind it. But as a sector right now, it just seems like it's just dangerous to be in.
No, it's the one that ran the most at the end, too. I mean, to your point, it's like a first in, first out analysis when the whole sector's for sale. I mean, that to me is like, with the social media stocks and in general tech stocks, which we're bearish on both now, finally for the first time at the same time. It was easier to be bearish on semiconductor stocks, for example, because they're cyclicals and they're slowing during a global cyclical slowdown. But if I look at these social stocks, I wonder what your thoughts are on this. Many of these executives, first of all, haven't been out of school for a decade, never mind seeing a couple economic cycles. What do you think the link is between advertising revenues, corporate profits, the advertising cycle itself, and where they may or may not see the future?
Well, first of all, what's most important is there's a finite amount of ad dollars out there. Mm-hmm. So if your business model, you saw Amazon right now is going to the ad market. So they're going to eat some ad market from some people, right? There's a finite amount of dollars. So you can create, and I'm still trying to wrap my head around this, Trade Desk, Roku, Facebook, Twitter, Google, and I haven't even gone to network television, print, I haven't gone to everything else. And the amount of places that people can advertise has completely expanded. But the budgets have to fit along with consumer spending. Mm-hmm. So everyone just wants to talk TAM, but a TAM on advertising has to be finite. And what's crazier than that is if you look at Facebook and Google, have allowed advertisers to be so much more efficient that in reality they should be able to spend less money because they can talk better.
Mm-hmm. And that's the dynamism of that on the other side of the trade is real. I mean, a corporation wants to maximize their profits. They're not just going to spend an unlimited amount of a piece of their budget just because the number's there. I mean, that doesn't make any sense at all. Who do you think has? Do you think it's Twitter that has on top of that the most regulatory risk incrementally from here, or do you think it's just a big net on top of all of them?
On top of all of them, I'll tell you what freaks me out that no one's talked about is how Facebook just invades your privacy beyond. I mean, I don't know if you've never noticed this, Keith. Like I was in an airport with my son, 2 months ago, and I looked at him. I said, Jordan, you're over your case. Your suitcase looks disgusting. I don't even want to travel with you. Get a new suitcase. It looks so stupid. And we're just walking. That night I go on my Instagram and I'm seeing like ads for suitcases, and it just consistently listens to me every time I say something. So now I try it. It's a fun thing I do with people over who don't know about this. Something you can all try at home. When you have friends over, pick a topic that you normally don't discuss. Okay, decide it away. Put your phones down. And then just start talking about it around your phone. Say, you know what, I'm going to take up golfing. I don't golf before, maybe I'm going to try golfing. And then you'll notice in the next few days, you're going to start getting ads for, hey, great first set of clubs. You're like, oh my God, I never looked this up. This is so crazy. So no one's really, and now it's so beyond that. No one's discussed it. But, I mean, God, look at Snapchat today. That's just dead. I thought that was going to bounce, and that's just a dog. The whole space is one big dog right now.
Yeah, Snapchat is a bloody pig. That's the other thing. When we don't like that one either. But at the end of the day, like for me, I don't know how old you are, and it doesn't matter. But I mean, this is my 18th year as a short seller. The first time I got into this business was like these things would never go up again. And I guess that, the big view every time is that it's different this time. But what's your kind of like pushback on that? Obviously, the .com companies didn't have any profits at all. But why should Snapchat have an update for the next 25 days or 25 weeks for that matter?
I mean, at the end of the day, if you think about it, I mean, I don't know if you have kids. I have 4 kids, and they speak to each other on Snapchat. It is what it is. They use Snapchat. It disappears. I think we all know now that it used to be Facebook. We could create memories, and Instagram. Now people are like, I don't want anything out there. You can't get a job if you have bad things on Facebook or Instagram. What's good about Snapchat is the disappearing factor. My kids like that, and other kids like that.
Yep.
Their management's terrible. The corporate culture is terrible. But I have no idea. Could Google buy it at a certain price and integrate Google Ads and make it maybe a more user-friendly platform? Maybe. I mean, if people, I think, 200 million people still use it, so which is a pretty large number. I guess there is a price to which it's worth to someone who knows how to make the business work.
Well, that's it, but it's still the same. It's still the same circus that everybody goes back to. I mean, if you want to watch it, you can watch Fast Monkey. I mean, or any of these guys on TV. They're always talking about, well, these guys have never opened a spreadsheet in their life. They've never looked or modeled a company out in full. But it's always these companies that they know in social media are going to get bought. They always talk about that. Well, if you look at the multiple, and it's like, that's not the way an acquisition works. If you're going to buy a company with a slowing growth rate, and you're a company with a high multiple because you have an accelerating growth rate, guess what your accelerating growth rate's going to do after you buy the company with the slowing growth rate? So, I mean, we've not seen Matchmaker actually made in any grand fashion in any of these blow-up social stocks, and I wonder if one of the biggest risks of all is that people actually fundamentally believe that they should just get bought.
I mean, you haven't seen them in the public markets. Obviously, in the private markets, when Google bought YouTube or Facebook buying Instagram was, great catches. But in the public markets, we haven't seen it. But I don't know. It's so much of this stock market. It's like high school. Who's the cool kid? Who's not the cool kid? Someone used to be popular. Someone wasn't popular. And right now, it's like, these social media stocks went from totally chic to totally geek. They're just not. They're not popular anymore, and nobody wants to be in bed with them. Nobody wants to know from it. And if you're Zuckerberg, you have to be thinking, I'm sitting on I don't even know, what is it, a $400 billion company?
Yeah. And
if my engagement level is going lower, and by the way, how about the backlash with the new iPhone, and it tells you how much time you spend on social media. And if you told me in 6 years from now people aren't taking pictures of their dessert, I believe it. I don't have to. My ex-girlfriend taking a kid to soccer practice is not a $400 billion company. But what's crazy is what I like most about Facebook and Instagram, I like the ads. The ads are so tailored to me, it's amazing.
Yeah, they are.
I mean, they know so well. I almost want to say, fuck the content. I don't want to see it. It makes me, I know everybody went to Mykonos. I hope you had a great time in Mykonos. You all had the same picture. I got it this summer. I don't want to see it. Just give me the ad.
No, I mean, the cool factor is what brings in all the reformed brokerages and whatever you want to call yourself as an analyst these days. But the reality is that it is what it is. I mean, it's purely qualitative analysis. It's based on some visceral effect that you have by virtue of the product and how it affects you. But we have not seen, getting back to 18 years ago when I first started short selling as an analyst at a hedge fund, it's like when growth slows, the stock goes down. And we have not seen U.S. growth slow for 9 straight quarters on a year-over-year basis, which again, going back to 1991 is the prior record, and there's no irony that that came out in 1991 pre the internet. So I wonder, is that the biggest thing to look forward to? Prevailing conditions help short sellers. If growth is slowing, why don't we just start to make a lot of money a lot faster?
I had to say, I think it's more sentiment. It's just sentiment. Why was it that 8 years ago anything with China was given a premium? Now you can't touch China. It's just sentiment. Facebook is still the same Facebook where it was, when the numbers, their quarter, the stock was 210, 215 in July. Yeah, so the quarter wasn't great, okay? It wasn't a complete abomination, but, and look, so just said, look, Netflix, which I'm surprised is $355 right now. They missed their subscriber number by 20%. I think Disney does more revenue from their theme parks than Netflix does in total. But for some reason, it's still the cool kid.
Yeah, it's
and,
cool.
People, you still want to own Netflix. But if you told me in a year from now, Netflix is $200 a share, why not?
Yeah.
I mean, at some point, yeah, I know this is going to sound so crazy. And thank God I'm as a short seller. Imagine how angry the CEO of Disney, Comcast, they're sitting around banging their heads. At some point, they have to make money, no?
Yeah, no, it's just true. I mean, but it's also true that China slowing started to destroy the Chinese bubble stocks. It's true that Facebook slowing, guiding to slowing revenue growth, was the first kind of big smackdown in that stock. So there is a causal relationship, obviously, when you're on the backside of an economic cycle. And that, to me, is the most interesting thing. I mean, in sharp contrast, pot stocks don't have a discernible growth slowing or macro top-down trend that you can really fight. Maybe you've blown up Bitcoin as well. I mean, there are plenty of bubbles that are already systematically imploding, but you haven't had pot stocks. You can't point to anything top-down that is actually slowing. And to the contrary, supply on the pot stock side is just expanding.
No, but you know what? There was an argument, and I was short Bitcoin, and there was an argument that could have been made that Bitcoin was going to 50,000. Stupid or not. Yeah. There's a finite amount of Bitcoin, finite amount could be mined. The more expensive it became, the more difficult it became mined. There was an idea that there was a global need for it. And believe it or not, it could have gone to 50,000. I can guarantee one thing about cannabis. Guarantee. The price of cannabis per pound, per gram, will be lower in 3 years than it is today.
It's true. I mean, I said this again.
But it's proven.
It's different that
Colorado, California, Oregon, it's passed.
If you start with a supply argument, absolutely. I mean, the dumbest hockey player I've ever played with, and I'm telling you, this is a very low level of intellectual quotient, could grow more pot than anybody I've ever seen. So I mean, we have, unlike that, Bitcoin does have an alleged fixed supply. So that is an interesting. I actually think that Bitcoin's getting a little bit interesting on the long side after not liking that for a while. But again, I don't have to break down why. What we want to do instead is get to questions that people have for you, which is much more interesting than my thoughts. Darius, you want to give Andrew what you think are some interesting questions that have popped up on the stream? And if you have questions, please pop them in there. As you can tell, Andrew Left is not going to hold anything back in answering these questions.
Oh yeah, awesome. Yeah, I appreciate that, Andrew. That was awesome. All right, so the first question, at Hedgeye, we like to start with processes that are repeatable, robust, and also incorporate sort of risk management as well. So just starting with that for both of you, actually. The first question is, how do you risk manage short positions that go against you until they work? For example, consider a stock that goes up 50 or even doubles before going to zero. What is the process to avoid getting squeezed?
I mean, well, if it's going to go up 50 or 100%, first of all, every day you recheck your thesis, okay? Am I still short for the reason, is there a catalyst involved? I just saw yesterday David Einhorn covered a 9-year short, I think it was. I'm like, whoa, God, that's beyond patience. And there was another stock he covered a short in yesterday when I read the letter. I forgot what it was. But the point was, if there's no incoming catalyst and it's going 100% against you, you should, it's not there. Now, if you believe there's a catalyst and you have an oversized position in it, then you can maybe and you can own some out of the money calls against it if you're short the stock. You can sell some puts. Again, it's stock specific. It's based on the volatility of the specific stock. So it's not a specific answer. This is what you do every time.
Gotcha. Yep. All right, keep moving here. You mentioned frauds earlier. That's something you look for on the short side. What do you mean exactly by fraud? Can you give some more detail there?
Oh, a fraud is a fraud.
Okay.
I mean, a fraud is, when you get a fraud, it's like, oh my God, look at this, it's a fraud, and you get so excited and your mouth gets watery, and then you fight it, and then the best is when the management comes out and says, we're not a fraud. It's like, oh, I knew you would say that. So what are you going to say? You were a fraud? But what's crazy is when you get a fraud and Wall Street doesn't care. And that's happened before, and it takes longer, and you have to prove it. Listen, when I did the Valiant situation, and I exposed the Philidor network, not Philidor, but the network involved, and the first reaction of the company was, we're going to tell the SEC on them, we're going to sue them. I'm like, wow, that's pretty wild.
Yeah, and once they bite on that, that's such a good point. I mean, our favorite short of all time so far in the last 10 years here was Lynn Energy. because we called it we didn't actually call it a fraud in so many words, but had to say it a certain way. But then all the frauds, like Kramer, basically said that we were a fraud. And I was like, oh my God, this is perfect. It's like fraud upon fraud. Not that Jim Cramer's a fraud, but I know that Jim Cramer not always a fraud. I mean, so at the end of the day, had he done his work? I don't know. Leon Cooperman was like the number 1 and 2 holder of the stock, both institutionally and him individually. We went in to see him. I'm like, I think we got this one. So at the end of the day, those are better than, you called them, just to remind everyone, you look for frauds, failures, and fads, right?
Yeah.
So frauds are the best.
Oh my God. Yeah. I mean, frauds are frauds. Frauds you can if you can articulate to Wall Street why it's a fraud, and if you know something that the shareholders do not know why it's a fraud, then it's the best.
There you go.
Indeed. You sort of hit on this with respect to Philidor and Valiant, but what exactly was your process for uncovering that network? How did you do that?
I mean, a lot of work. It's funny. I go for dinner with people, and people always say, "Oh my God, have you watched this new show on Netflix? What do you binge watch?" I'm like, I don't binge watch anything. I read about stuff.
Yeah.
Binge watch. I mean, I don't get that. I'm not going to sit for 7 hours. I know Ozark, great. I'm sure it's wonderful. I'd rather sit there, read filings, go check things,
Yeah.
and uncover, make my own Ozark.
Yeah.
So I don't. It's just a lot of work. It really is. Anyone who thinks, if there's millennials out there who think they're just going to trade stocks and make a lot of money, have fun.
I'm sure there are plenty.
By the way, what do you think are the top, I don't know, what's the top fraud that you're looking at on your screen today? You mentioned one pot stock.
Oh, well, no, I'm not. Well, first of all, that pot stock, but I have another one. I'm not short enough to actually come out and say it.
Okay, good.
But I think, but there's, how about this? I'll give it a hint. Any company who tries to blame short sellers, and you can't say Tesla because Tesla's a unique situation.
Right.
They do have a demagogue type leader. They have a product that's compelling, no doubt. Okay, but if you have run a company and you're trying to blame short sellers, there's a good chance you're a fraud.
Yeah, no, I agree.
True. Sticking with the theme of frauds, because this seems to be getting a lot of investor attention here. Andrew, you've compared Wayfair's business model to a Ponzi scheme. Can you elaborate on why you think that?
Wayfair?
Mm-hmm.
Well, Wayfair just became a matter of, but when I say a Ponzi scheme, the insiders were selling, and insiders were selling, Wall Street is buying. So obviously Wayfair's not a Ponzi scheme in the way of, like a Madoff type situation, right? But they are. I mean, if you go back to Wayfair, what's crazy about this situation? So if you look at their 2015 presentation, where they expect, or 2014 or 15, their earnings estimates have gone like this, like that. Meanwhile, their stock price has gone like this. So what's happened is, it's like Wimpy from Popeye. Buy my stock today and I'll make money on Tuesday. Buy my stock today and I'll make money on Tuesday. And they still haven't. And at what point, will management just come out and say, okay, guys, we're just not going to make money? But shareholders that own it love that TAM, home furnishing.
It's the Amazon of home furnishings.
Oh yeah.
I can show you when you order furniture, what makes furniture so crazy. And I wish I could bring it around. I could show you. My wife actually ordered a nightstand for our guest house online, and it was like this big, like Stonehenge from Spinal Tap. When it was like really small. It's so tough to buy furniture online, and that's why when you say technology company, everyone's a technology company. I think Restoration Hardware did like 57% of their sales online. I love Restoration Hardware. I think it's a great product. It's a unique product. They've got their supply chain better. They do over 50% of their sales online. You can go to the store, sit in it. They give you an experience. It's about new retail and technology. Williams-Sonoma, over 50% of their sales are online. Home Goods is selling a lot online. Yeah. So and Wayfair is opening stores. Really, Wayfair is opening like pop-up stores. So is Wayfair a technology company and Restoration Hardware is not a technology company? It's almost like, in the 70s, if someone bought a computer for their, company, they became a computer company.
That's a good example, though. Restoration Hardware. I mean, so what not to do in short selling? Just short it because it's expensive. I mean, restoration hardware, as you know, Andrew, has always been expensive. And by the way, it was expensive when it went bankrupt the first time. But it doesn't mean that you just short it because it's expensive. I mean, that's a good example of one that's really squeezed, the bejesus out of people.
Here's what I like about like a restoration hardware is I think, assuming the economy stays strong, obviously, unlike a Wayfair, they sell branded, unique, differentiated products. Mm-hmm. And people for restoration hardware is not like the old restoration hardware. You can go in and customize things and get them in a fair amount of time and decorate a home. And it's a unique product. I mean, you can walk in and see it, which is very important for furniture. Furniture is all about omni-channel retailing. Mm-hmm. Unless you're selling, Halloween decorations, which, Wayfair, like, oh, look. But there's no margin there. You want to make money?
Those are pop-up stores.
You want to sell a couch. You want to sell a couch go buy a couch online and tell me if you've never sat in it, and go tell me how it is to return it. Imagine returning a fucking couch.
Yeah, exactly. Awesome. Let's get some rapid fire here. Keep it moving. What's your long-term price target on PYX?
Wow. Okay, that's a tough one. I'm going to put out more research on it later. And the reason why, it all depends on the industry as a whole and where it goes. Okay, so you can't separate this from the rest of the stock. When I was putting out PYX, I think people want to give themselves exposure to the cannabis space. At least give yourself a shot. Okay, put yourself with someone who's a player. Put yourself where you can make money, and that would be them over a Tilray, a Kronos, and everything else. So there's so much we don't know about the cannabis space. We still haven't seen how it's going to play out, what rec does to medicinal, how long does it ever become federally legal in the U.S., what's the rollout, what are the legalities. So there's so much to it. But at least align yourself with strong management who knows agriculture. And that's what I thought, PYX had that a lot of the other players didn't have. Now, note, stock doesn't have any analyst coverage. It was a sleepy tobacco producer until actually earlier this year is where they started their cannabis initiative. So it's not like they're one of these OTC stocks that has 3 weeks to cannabis.
Yeah, that's a good example of for a short seller. That's a good example of at least one thing that I do every morning. Everybody else can do whatever they want to do, but just look for stocks that are up double digits on the open. Just do a quick screen, say what's going on with those. Like PYX is a great example because that's today, right, Andrew? That's the first time that I've seen that stock was today. So I quickly look up the company, and it's like, oh, they roll like tobacco leaf. And it's like, okay, well, that's probably has something to do with something that has to do with pot stocks. So it's one way to look to where the froth is going on the open. Anything that's particularly small cap names that are up double digits on the open. That one you'd say would have follow through though.
Well, it's a very tight float. If you look at their enterprise market cap, it's really not, even with their debt, it's not that large compared to some of the other stocks, the cannabis stocks you're seeing out there. Now it doesn't mean they're not immune to cannabis froth. Of course they are. Mm-hmm. But at least you have management that knows how to grow tobacco, relationships with Philip Morris. They have worked with 3,000 farmers. They're not a few bankers from Toronto who decided, hey, let's go take a company public. And not to mention they have a real underlying business that's generating, a large amount of profits.
Hey, obviously, I thought that bankers in my homeland in Vancouver and Toronto are the most upstanding investment bankers in the world.
Depends what street they're on. If it's, it's funny. Namaste is on Burrard Street, and I've been short selling so long. 17 years ago, all you had to do was look for Burrard Street, and it was great. And now I'm like, oh my God, Namaste on Burrard Street. They're bringing back Burrard Street. How great is that?
Oh my God.
So yeah. That's pretty. By the way, it doesn't mean. There's a lot of good cannabis companies. There's a lot of companies out there in Canada who are trying to do the right thing. Not every CEO is a charlatan. There are a lot of CEOs that aren't as promotional. Obviously can't trust. I'm not supporting them. I'm saying go buy the stock, but they're working hard. They're trying to make it happen. I still am not fully convinced on where the CBD is going to roll out. Right now, everyone's talking CBD like it's. Remember, like Windex from Big Fat Greek Wedding, like it cures everything. My shoulder hurts, CBD. I have a headache, CBD. I want a trading account. Go rub CBD on your computer. So we still have to, see where that goes. But it's a real industry.
Yeah. Well, I mean, it's not unlike any other industry where you get a lot of market cap. The MLP bubble, for example. I mean, it doesn't mean just because Lynn Energy was a fraud didn't mean that all the other companies were a fraud. So I mean, that's our job, right? I mean, you go to where the bubbliness of it all is, and you're going to find when there's a lot of money to be made, some frauds. That's just kind of the way that it goes. You just got to do a lot of work. So I think
you got to pause it. Anything that looks suspicious, and that's a key thing. If something doesn't look right, research it more. There's a good chance it's not right.
Yeah.
Absolutely.
Maybe one or two more questions, and we'll.
Yeah. Let's shift gears a little bit to some macro, and maybe just get your thoughts on kind of how you guys sort of think about both of those things. Says Rob's asking, with the economy pivoting from Quad 2 to Quad 4, just for those of you who may be new to us, Quad 2 is a situation where both growth and inflation are accelerating at the same time, to the Quad 4 where both are actually decelerating off those peaks. Hedgeye is effectively preparing to short tech. Does Fitbit stand out as a good sort of thematic long or a style factor short? So kind of question for both of you.
Well, I'm sure. Do you know Fitbit? I don't know Fitbit, Andrew.
Well, I know Fitbit very well. It's unique. It's funny. There's no doubt wearables are, I think wearables are growing faster than tablets and PCs definitely. And there's the future in wearables. Apple just made their watch bigger. And I just don't see everyone just letting Apple just run away with it, Google. So, Google was a little late to the smartphone, not much late, but they were. They took, big market share. And this goes to who buying who. Fitbit has like $750 million into R&D into what they're doing right now. I think they have a deal with was it Dexcom? They did a deal with, some heart rate monitoring, I think it was. And they can't live by themselves. Fitbit would be a better part of whoever is going to take on Apple. But if you look at the enterprise market cap of Fitbit, if you ask someone about their wearable, it's still the brand name. It's the Band-Aid. It's the Kleenex. It's the brand. People go, oh, like Fitbit. And there are people still like Fitbits. But meanwhile, can they sit there and fight Apple? It's a different market. They went lower. The new Fitbit's selling well. But it's not sexy. I don't think the CEO sells the story well. And I think if he doesn't sell the company, it's a big problem. But if he legitimately has a better mousetrap on his technology, then the wearable space is real and only growing.
Yep, absolutely. And then a question for you, Keith. When do you think the EM markets route will stop? How long can investors stay short there?
Well, EM's just been a fertile ground. You talk about a fertile ground for short selling. I mean, top down, you could literally shoot fish in a barrel at this point. So strong dollar, that's one big thing. Global growth slowing is the other big thing. Guess what? The dollar goes up when the world's growth is slowing. So I think that until we're done with that, and we still don't think that that's till at least until the beginning of or the end of the first quarter of next year, I think EM still is a great place to make short sales. Andrew, you got any good emerging market frauds?
Yeah, here's what I think. It's funny. When people say short sell, do I think the market's going lower? I really don't give a shit if the market goes lower. What I want to see is rotation. So, could the market, let's say, stay here? I'm not an S&P trader. But can one day the high TAM, like the Wayfairs of the world, Wayfair, Carvana, Stitch Fix, which just, got shit the bed, it's all the same stock, which is big TAM. Now, can money come out of that and go into financials? Possibly. The China techs got the shit beat out of it. I read Stanley Druckenmiller's letter a few days ago, who I greatly respect, and he was long China tech. China's not going anywhere. I know we're in a trade war with them. Go to Shanghai, and you still can't get a dinner reservation. Mm-hmm. It's there. So can one day we look at China tech and say, wow, why don't I sell Amazon and buy Baba?
Yeah.
Why don't I sell Amazon and buy JD? So Amazon goes lower. I don't care what the overall market does. I want to be able to predict rotations and short the people who are coming out of the rotation. Not the people, short the companies coming out of the rotation.
That's a good example. If you look at a basket of Chinese internet stocks that have been pounded, they've been pounded, whereas iBuy, which is a good ETF, or bad ETF if you're long it, but it had Stitch Fix as the number 2 weight, for example, Andrew. And iBuy, the ticker is iBuy, that just started going down, right? Chinese stocks have been pulverized. Emerging markets have been pulverized. So you tend to, I like to go to the place that just started going down as opposed to just stomping on the place that everybody's already been.
Yep.
I mean, you go look at the gross merchandise volume to price on JD.com, Baba, and compare it to Amazon, and Amazon can still be great. They can still be great Amazon, and the stock run in place. People forgot 4 years ago when Apple was stuck in the mud for 2 years. It just didn't go anywhere.
Yeah,
But it didn't make it a bad company. It just, people were just rotating money around.
Yeah, that not understanding that, and maybe that's a good spot to end. Not understanding that the machine has never been more relevant in terms of rotation. I mean, 90% of daily trading is systematic. You know, when you and I started in this business, Andrew, it was block trading. You know, now systematic trading, you know, no matter how good your short idea is, it can run you over or it can get you paid. I think I just have a belief right now that momentum, high beta, and growth, those factors are not going to get you paid on the long side. It's actually happy hunting
And not just not
on the
getting
short
paid.
side.
When they fall apart, there's no bid for them. When Wayfair, if tomorrow people decide, and I'll leave with Wayfair, if tomorrow people decide, you know what, Wayfair's a furniture company. They have stores or everyone else. And they say, okay, fine, where's the bid on the stock? Where they lost $35 million last quarter compared to Restoration Harbor that let's say made $100 million, whatever it is, or Williams Sonoma did. I forgot the exact numbers. Okay, if I start looking at this as a furniture business, where's the bid? 135, 25, 15, 95, 80, and that's the problem with it, is there's nothing underpinning it.
Yeah, well, that's the problem with a lot of companies. When there's nothing underpinning it, all that you have left is the chart. So thanks for that. Appreciate it. Awesome, man. Really, the last 45 minutes were electric to a lot of people, particularly if they don't get short selling. So thanks for leading off. We appreciate it.
Great talking to you, Keith. Have a good day.
Thanks,
All
Andrew.
right, thanks. That's Andrew Leff. Colorful and right on a lot of different things.